Good morning from London. I'm Kriti Gupta alongside Guy Johnson. We're an hour away from the opening trade. Here's what you need to know. Donald Trump puts NATO on edge, throwing America's commitment to Article 5 into question as divisions remain over the 5% defense spending target. We're live on the ground in The Hague. And the EU plans to impose retaliatory tariffs on U.S. imports, including on Boeing aircraft. That is, if the United States puts even a baseline levy on the bloc's goods. It's an outcome many expect ahead of the July 9th trade deal deadline. Meanwhile, Fed Chair Jay Powell holding the line on rate moves despite some FOMC members signaling an openness to lowering rates as soon as next month. Guy.
Markets are not the event today. We're going to watch politics. We're going to watch what's happening in The Hague. We're going to talk about what is happening with this trade deal. Markets are sitting tight. We saw a big day yesterday. Today we don't have very much on the agenda. As you can see, Euro Stoxx 50 futures pretty much becalmed. A little bit of catch-up to do versus the United States. S&P futures, absolutely nothing to see here. Remember, though, the Nasdaq, all-time highs yesterday. When does the S&P follow? Are we going to see that soon? Euro dollar pretty becalmed as well. No movement on that front. Where we are seeing a little bit of movement, not much though, is we are seeing a bit of a bounce back in crude. But we have seen it tumbling over the last few days. So where does the next catalyst come from? We are going to find out. The countdown to the opening trade starts right now.
There's numerous definitions of Article 5, you know that, right? But I'm committed to being their friends. You know, I've become friends with many of those leaders, and I'm committed to helping them.
What do you want the role of NATO to be going forward once these other countries are spending more?
By having a unified system, I think we're going to have stronger peace, better peace, and I think we have that.
Article 5, 5%. Those two things seem to go hand in hand right now. That certainly seems to be the message coming through from Donald Trump. The NATO Secretary General, Mark Rutte, is speaking right now. Let's take a quick listen in, because this is going to set the agenda over the next few hours, and it's worth starting here.
To a durable and lasting peace. So a transformational summit, looking forward to it. And, of course, hope to see you later today. I can now take a few questions, and then at the end, we will see each other at a press conference. And I see that CNBC wants to start.
Thank you very much.
Sir.
Steve Sedgwick, CNBC, as you know, sir. Look, there's a lot of questions about Spain. There's a lot of questions about nations that do not feel they have the money in their budget to get to 2%, let alone 3.5%, let alone 5% in total as well. Do you fear that Spain could scupper this meeting and actually, sir, despite all your huge diplomatic efforts, incur the ire, the wrath of the United States?
No, I don't. I'm not worried about that. Of course, these are difficult decisions. Let's be honest. I mean, politicians have to make choices in scarcity. And this is not easy, because 7, 8 countries at the start of this year not at 2%. They will now reach the 2% this year. Many of those countries said we will do it somewhere in the 2030s. They've now committed to do it this year. And already we added in an aggregate of $1 trillion since 2016, since Trump 45 started his first presidency. But today, and this is the third stage, we will add trillions extra with this new plan. But of course, you're right. The countries have to find the money. It's not easy. These are political decisions. I totally recognize that. But at the same time, there is absolute conviction with my colleagues at the table that given the threat from the Russians, given the international security situation, there is no alternative. We've got to do this, really.
Mr. Rutte, why won't Mr. Trump back Article 5?
For me, there is absolute clarity that the United States is totally committed to NATO, totally committed to Article 5, and yes, there is also an expectation, which will be fulfilled today, that the Canadians and the Europeans will speed up their spending, making sure that we not only are able to defend ourselves against the Russians and others, but also to equalize. And this is fair, that we spend the same as the US is spending. Sir, yes. The big thing about Article 5, and the good thing about Article 5, is that it is clear that we defend each other when we are attacked. But you will always get all these questions, yes, but if this cyber attack or this hybrid attack, we never go into those details.
General, you had dinner with Donald Trump yesterday.
Today, in what mood was he? And
Excellent
do you
mood,
think...
and the King and Queen...
The NATO Secretary-General setting up the show very nicely, to be honest, talking about all the main issues that we want to talk about, i.e. what is happening with the Spanish commitment to NATO, what is happening with Article 5. Does 5% mean Article 5? Are those two numbers symmetrical in President Trump's mind? We're going to find out. We've got a press conference coming up towards the back end of the show, it seems, between Mark Rutte and Donald Trump. So they're going to make some opening comments. We'll pick those up a little bit later on. And Kriti, we're about to speak to the Spanish finance minister.
The number one question that he was asked is, are they basically setting a precedent when it comes to the spending? His response, we got to spend as much in Europe as they do in the United States. This is coming at the same time as you're dealing with trade negotiations as well. So you see a lot of economies, including Spain's, but also other economies in Europe that are saying maybe trade tariffs are coming down the pike, coming July 9th. How are we supposed to manage that? Plus the defense spend, plus the deficits that are already building up.
It's guns or butter in Europe. Europe has to make a decision, and it's got to figure out how it's going to make it work. Social security spending, the desire to spend on social security, welfare, etc., is huge and enormous in Europe. Germany is obviously one of the few countries that has the room to do it. Spain doesn't. France definitely doesn't. It's interesting, we're going to be talking to a defence analyst from Bank of America a little bit later on. He picked up on the same thing I picked up on at the Paris Air Show. A little bit more caution coming out of the French aerospace and defence companies versus the German defence companies. The Germans are confident that they're going to get the money. The French are a little less clear on where exactly the money is going to be coming from. So Europe's got some really difficult decisions that it has to make right now.
You mentioned the Paris Air Show. I thought it was fascinating that you saw the EU Trade Commissioner yesterday actually name Boeing aircraft and the Airbus-Boeing divergence there and how that trade conflict actually shows up in an actual corporate story. This has been something brewing. You've mentioned it plenty of times behind the scenes before. But now to hear it from the Commission themselves.
Airbus currently has a 10% tariff on aircraft that are going into the United States. If you're Ed Bastian from Delta and you've got a huge order book coming out of Toulouse, that's a big problem for you. So we can't go down to baseline tariffs and simply leave it there, with Boeing having a different story under this agreement than Airbus does. So I think you're going to have to see some give and take on that front. But how far is the United States going to be prepared to go on that? The UK deal includes a 10% baseline. The EU is basically saying, no, thank you.
And they started that from the get-go. They wanted 0 for 0 from the beginning. That was a non-starter for a lot of the U.S. trade negotiators as well. The other piece, I think it's fascinating. We're kicking off the NATO summit with a lot of this question around the spend and the allocation there. And of course, Spain kind of throwing a spanner in the works, not to channel too much of a British term, but is also the idea of what's going on in the Middle East. Is Donald Trump looking to take a victory lap here, especially in the context of the fact that we did get a report from the intelligence arm of the Pentagon saying, well, maybe this only delays the nuclear program instead of destroying it altogether. We're
going to be talking to a former head of MI6 a little bit later on as well in the program, get his take on what is happening here. What did the US do to change the narrative? What happens next? Are we going to be... How fragile is this truce? Oil picks up a little bit today. Now, I can understand why oil picks up a little bit today. It's been dropped pretty hard over the last couple of days, so it was never going to continue to drop in that kind of direction at that kind of pace for that long. So I just wonder whether or not we can ignore that and park that. But I think this issue of where we go next in terms of this narrative, this feels like we're at a hiatus rather than having reached a conclusion.
It's fascinating as well because as we see this oil volatility, it doesn't seem to be really changing the thinking over at the FOMC, maybe briefly changing the thinking at the White House, but the markets, to your point, you see that pickup in oil, but you look at futures, you look at the bond market, this is a nothing burger today.
It is, but it comes after yesterday where we did see the Nasdaq hitting all-time highs. We're back. Equity markets have been really on the front foot. We'll talk to Baiba about that. In fact, let me just tell you what we've got coming up on the show. So John Sawyers, I just mentioned him, former chief of British intelligence at MI6, is going to be joining us. Baiba is going to be joining us as well. UBS's chief strategist, unconvinced, I have to say, Banu, by what is happening in equity markets. Braže, the Latvian foreign minister, will be joining Oliver Crook at the NATO summit a little bit later on, and Ben Heelan, Bank of America head of European Industrials Research, joining us post-Paris, post the Paris Air Show, giving us a take on what is happening with the NATO story and where defence spending is going to be coming from and where it's not going to be coming from, and the differences and the divergences we're seeing within the European aerospace sector. We can also ask him about what's happening on the civil side as well, Boeing versus Airbus. What else do you need to know this morning? Let's run through some of the key stories that are on the agenda. Former New York Governor Andrew Cuomo has conceded to rival Zoran Mamdani in New York City's Democratic mayoral primary. Cuomo pitched himself as a seasoned moderate, while Mamdani was backed by the New York City branch of the Democratic Socialists of America. If elected in November's general election, the 33-year-old Mamdani will become New York's youngest mayor in a century. Former New York City Mayor Michael Bloomberg, of course the majority owner of the parent company of Bloomberg News, endorsed Cuomo. Demand for electric vehicles and hybrid vehicles is boosting Europe's car market. The latest figures from the European Automotive Manufacturers Association show new car registrations rose 1.9% last month. That's from a year earlier, to just over 1.1 million units. The Chinese continue to gain ground. BYD has almost doubled its market share and now sits at 5.9%. And Federal Reserve Chair Jerome Powell has reiterated his view to US lawmakers this time that there is no rush to cut rates, pushing back on President Trump's demands.
The effects of tariffs will depend, among other things, on their ultimate level. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance.
We'll hear from him a little bit later on again. Powell's remarks before the congressional panel came on the heels of the Fed decision last week to leave rates unchanged. But the 8th and the 9th, depending on which day you want to focus on, that issue of tariffs could be back on the agenda big time.
Absolutely. It's going to be something that permeates throughout the markets all summer long. Coming up, of course, today the focus is all about what's happening in The Hague. Donald Trump arriving at the NATO summit as he seems to cast doubt on one of the alliance's central tenets. Plus, defense spending at the center of the summit. We're going to check on the sector after the open. Are the valuations pricing in the change when it comes to some of the narrative we're hearing from? But up next, straight from Madrid, we're going to speak to Carlos Cuerpo, Spain's economy and finance minister, in an exclusive interview, not just around defense spending, but the latest on the banking story there as well. If you have any questions of your own or for our guests, get involved in the conversation. IB plus BBTV Go is the function on your terminal. This is Bloomberg.
"15 minutes past the hour. I want to take you back to The Hague, where we are watching Dick Schoof, the Dutch Prime Minister, taking questions from the press. Basically, what you're about to see unfold is the arrivals kind of promenade. European leaders, global leaders, you could argue, are arriving for the NATO summit. We are going to be hearing from a series of them over the next kind of few minutes, and we are very much focused on a couple of key issues. How should we think about the Article 5 commitment from the United States, and how do we think about countries such as Spain that have decided that they do not want to hit the 5% target that is being set currently? How do we square that circle, and do these two things fit side by side? Article 5 and 5%. Do those two numbers go together, Kriti?
Well, let's get the view from Spain itself. Spain has obtained an exemption, as you said, from that 5% target, with Prime Minister Pedro Sanchez pointing defense spend of 2.1% of GDP. In his words, nothing more, nothing less. Joining us now in an exclusive interview is Carlos Cuerpo, Spain's economy and finance minister, maybe to walk us through some of the thinking in Madrid. Minister, thank you so much for your time this morning. We appreciate you joining us. Walk us through the thinking around this 2.1%. It's fascinating that Spain can say they can deliver the same capability targets that NATO wants for less of the spend. Where is that math coming from? Is NATO doing that 5% math wrong?
Well, of course, good morning. Thank you very much for the invitation to be here today. Just let me walk you through our analysis on defense capabilities and defense spending. Basically, the main idea is very simple, is that the necessary spending will come as a result of a fully fledged analysis of the capabilities that are needed to provide for the NATO defense on the threats that have been identified. There's been a complete analysis that was run basically a month ago on the capabilities of updating the threats and on the capabilities that are needed to cover for those threats. And Spain will, of course, as the other allies, make good on their commitments to cover for the capabilities that are our share, that are our responsibility. We will be a responsible ally, as we've always been. The issue here is that the coverage of those capabilities will come at a cost. And what we're saying is that this particular cost for Spain, as we've estimated within our Ministry of Defense, will amount to a specific number, which is, in terms of percentage of GDP, 2.1%. So this is not related to making good our commitments or not. It's just a different estimation of how much will it cost for Spain to make good on our commitments with respect to the covering of the capabilities that are necessary for NATO to protect itself.
Minister, good morning. It's Guy. 5% is the number. Why do you think you're different?
Well, again, we're not different. The only thing that we're saying is that the discussion should not focus around a specific ad hoc number. What we're saying is that the discussion, as it has been the case for the previous months, should focus on updating the threats. That's point number one. And then once you have the threats updated, you have to get an estimation of what are the capabilities that you need to face those threats. And then you have to share the cost of those capabilities amongst the different allies. And this is what has been done over the past few months. And Spain will make good on our share, on our fair share. And the only
5% is the number. 5% is the number. Sure. Everybody else is doing it. Everybody else is saying we will do 5%, almost everybody else. The President of the United States is questioning Article 5, the commitments. Why should Spain enjoy the coverage that NATO provides under Article 5 if it is not prepared to spend the same number, 5%, as everybody else?
Again, allow me to agree to disagree. To me, what is actually key is that each and every one of the allies makes good on its commitments to cover for the capabilities that are necessary to actually protect the alliance. And this is what Spain will be doing. And we will be doing our fair share as the rest of the allies. And again, Spain will not be an outlier on this. We will be protecting, as the rest of the allies, NATO from the different threats that have been identified. We will make good on our commitment towards providing for those capabilities that are needed.
Minister, we've talked plenty of times on Bloomberg Television and at various events. You've said this in various press conferences. Spain is having a moment in the sun. The economy is doing well. The inflation numbers are coming out good. The labor economy is finally far more productive than it has been in years, something reflected in the bond market. If not now, then when, in terms of increasing the defense spending to beyond 2.1%?
Well, again, I think the discussion is not the increase of defense spending per se, or for the sake of just having a higher number. Again, we have to derive the specific number that is needed from a fully fledged previous analysis on what are the threats and how to cover for those threats. That's, I think, pretty easy to understand. And Spain will make good on covering our commitments in terms of those capabilities. We've actually been increasing our spending and investment in defense over the past few years, more than doubling it. And we also increased this year in 2025, making good, as you said, on our good economic moment as well. We increased our defense spending up to 2% of GDP from barely 1.4 in 2024. So we're doing our share. We will be covering for those capabilities, and we will be doing our bit when it comes to defending NATO allies.
Dick Schoof, the Dutch Prime Minister, is currently answering questions in The Hague as we start the NATO summit. He says it is too early to talk about repercussions for Spain if it doesn't make 5%. Do you expect repercussions? Do you expect there to be some sort of blowback as a result of this? Are repercussions something you're prepared for?
Well, again, let me go back to my argument before. Spain is behaving as a responsible ally, making good on our commitments to cover for the capabilities that are needed. Therefore, of course, no repercussions should derive from making good on our commitments and from being a reliable NATO ally, covering for the capabilities that we did commit to and that are necessary to defend NATO from the different threats that have been identified by experts.
Minister, Outside of the NATO spend, Spain also making news when it comes to a different topic in Europe, which, of course, is banking consolidation. You made an announcement yesterday in terms of the conditions around the BBVA takeover bid for Sabadell, imposing some very strong conditions we haven't seen in previous iterations of M&A in Spain and, frankly, across Europe. Walk us through one of those conditions, which is simply the change in terms of pushing apart, if this takeover does go through, creating them as two separate legal entities for a minimum of 3 years, as much as 5 years. You claim it's to protect jobs, protect branches. What changes in 3 or 5 years?
Well, as you said, we did authorize the takeover bid yesterday, imposing one condition, which is that for a period of 3 years, both entities have to keep a separation, legal separation, and also separate management of specific policies, such as credit policy, HR policies as well, or even policies related to the management of branches or financial inclusion. Our main take here is that for the next 3 years, there will be a transition period where we do not expect a discontinuity in those specific policies. As I said, credit for firms, HR policies, or also financial inclusion policies, the dealing with particularly rural branches. We do not expect a discontinuity as a consequence of the takeover. What we want is that in this transition process, the creation of value added for shareholders of both firms can be compatible with the protection of those
Minister, I hear
interests.
you. I hear you on that. But when you look at the previous, again, iterations, we're looking at CaixaBank, we're looking at Bankia, for example, in that merger, the conditions weren't as strong. Why can BBVA not execute the same kind of takeover that we've seen with the likes of Caixa and Bankia, given that that has been the roadmap in Spain for quite some time?
Yes, let me also give you a bit of a context on how does the national legislation deal with these takeover processes in all sectors, but also within the financial sector. So there are different steps throughout these takeover processes. First, of course, financial supervisors have to give their green light in terms of the impact on financial stability. Then we have competition authorities giving the green light in terms of competition concentration issues. And in this case, what the competition authority was to actually go to stage 2, which means authorizing the operation, again, this acquisition, with specific conditions. Actually, the conditions from the competition authority went also to a period from 3 up to 5 years. No, just let me finish 1 second, because this is important. The fact that for the first time, the competition authority imposed those conditions in this stage 2 actually opens the door.
Minister, I hate to interrupt you, but just for time,
Minister,
I absolutely hate to interrupt you, but just for time, I have to ask you the final question here. There is an argument that this deal, this potential transaction, is getting more heat for more political reasons than financial, simply because of Sabadell's concentration in Catalonia. What do you have to say to that in terms of the political ramifications of what this takeover might entail?
Well, I would say directly that this is not true. Let me just maybe link it to what I was just saying, that the National Authority for Competition actually understood the difficulty, the specificity of this operation, leading it towards what they call stage 2 with specific conditions for a period of 3 up to 5 years, which is, again, what also the government has done in the remit of our competences, of course, which have to do with the protection of public interest when it comes to reasons different from the competition, from the defense of competition issues, which is protection, as I said, of workers, protection of firms, and protection also of clients in terms of financial inclusion.
Minister, we have to leave the conversation there, but we look forward to having you back to give us a little bit more of the flavor of how you're thinking about this and, of course, the NATO spend. Carlos Cuerpo there, the Spanish Economy and Finance Minister, joining us for an exclusive interview. Stick with us. More ahead. This is Bloomberg. "30 minutes away from the start of the opening trade across Europe. When you look at futures, we keep talking about this, the complacency trade, the lazy trade. What are we actually waiting for? What are we pricing in here? We are seeing futures, at least on your stock 50 futures, higher by 0.3%. But look, it's been a volatile session, at least from yesterday's perspective. Perhaps today is a bit of a breather. FTSE 100 virtually unchanged, Guy.
Absolutely. But yesterday was a really big day. Yesterday, we priced a much lower oil price. We saw equity markets rallying off the back of that. There was a certain sense as well that maybe Powell was going to be delivering that rate cut a little earlier than maybe anticipated or certainly priced, as a result of which we saw equity markets moving sharply to the upside. This morning, I don't think there's much action in the bond market. We are waiting for plenty of further catalysts, though, still to come. Some of that's going to come today. Some of that's going to come over the next couple of weeks as we await the arrival of the tariff debates back on our doorstep. I suspect that comes probably as we build up towards the 8th and the 9th. You're also looking at the launch complex at the Kennedy Space Center. Right now, I can bring you those pictures. You are looking at stand 39A, where we have another SpaceX rocket, which is about to launch in just under a minute. This is another private space mission to the International Space Station that is going to be taking off. You basically got the rocket with the Dragon capsule stuck on top of it, and we are going to see a further mission coming. This is the Axiom mission. This is Axiom Mission 4, which is a fourth private astronaut mission to the International Space Station. Obviously, this is the more reliable of the launch vehicles that they currently have as we watch the bigger tests failing at the moment. But this probably would be something that we should expect to go, hopefully, without a hitch.
Well, the timing of this is fantastic. And, you know, it's a really good day in terms of having this discussion because, of course, on the NATO summit, we're talking about the Trump effect. But that very much permeates through it in terms of the tensions with SpaceX as well. Let's listen in to the countdown to the launch.
2, 1, ignition. And lift
For three nations, a new chapter in space takes flight. Godspeed, AX4.
Plus 30 seconds into flight with the Axiom 4 crew on board Dragon, headed to the International Space Station. Waiting to hear call-outs from the Falcon 9 engineering team.
Power and telemetry nominal. Stage 1 throttle.
We're throttling down the 9 Merlin engines. We're into the throttle bucket, preparing for max Q.
Max Q. Vehicle is supersonic.
We should begin throttling the Merlin engines back up now.
Stage 1 throttle up.
Max Q is the point at which the aircraft is seeing maximum stress. We've just passed that point. The 9 Merlin engines now throttle back as the aircraft continues its journey into space. I want to actually draw a line between what we're watching on the screen right now and what is happening at the NATO summit. The lens is being widened currently as to what constitutes defence spending. Yeah. Does that constitute defence spending? How does Europe sit within the defence spending story? I spoke to the other day at the Paris Air Show to the head of the European Space Agency, looking much more for a defence mission to have that mission rolled into the numbers that we're talking about, the 5%. The lens is being widened significantly in terms of what is included. And in some ways that is healthy, and that also provides some incentive for Europe to think about what else it needs to do and broaden the capability remit that it has. And space is going to become an increasing part of that. So there is a relevance, I think, between the two stories that we're covering this morning.
Well, it's fascinating because while you were at the airspace shows, and I believe at IATA, or at the air show in IATA before that, at Super Return, one of the big conversations they're having is private money going into, when they talk about defense, instead of things like weaponry and ammunition, things like satellites and technology, and whether that gets roped into that kind of funding as well. We'll see if that's part of the conversation, at least when it comes to what that spending looks like in NATO. Of course, we are looking at a live shot of The Hague. NATO leaders today hoping to find agreement this week to President Trump's demands to increase defense spending. Of course, we just had a conversation with the Spanish economy minister about Spain's refusal to meet that 5% of GDP target, something that's caused quite a bit of tension across Europe. Kaja Kallas, the EU's foreign affairs chief, says member states have a lot of difficult decisions to make.
We have heard, of course, Spain raising the issues that they are raising. I think it's important that we get the decision of moving to 5%. It's a very ambitious target, also requires a lot of difficult decisions from member states. That is very clear.
It's not.
Bloomberg's European correspondent Oliver Crook is live on the ground in The Hague covering the summit. Ollie joins us now live on location. Ollie, walk us through what you're getting in terms of those discussions on the summit. How is it going?
Yeah, from top to bottom, Kriti, this is really a summit that's been orchestrated and choreographed to flatter and to support Donald Trump, from the frills to both the substance and the frills of the conversation. So beginning with the frills, we obviously saw that text message that was sent by Secretary General Mark Rutte to Donald Trump, which Donald Trump almost immediately sort of posted on social media, intensely flattering of the president's leadership, intensely flattering of what he accomplished in Iran, using a lot of sort of Trump language and cap locks, but also saying that basically he was preparing a big win for Trump as he arrived here in The Hague. He also had dinner with the king at the palace yesterday with a number of other leaders, but he was the only leader to actually stay at the palace overnight, which I'm being reliably informed by Dutch media here is a very rare honor that the king bestows upon any sort of guests here. But then, of course, there's the substance of the meeting, which is the 5% target, where we have seen a little bit of friction, as you've just been pointing out, with the Spanish, with Pedro Sanchez. They say they really want to meet the commitments in terms of hardware and delivering the sort of things that NATO needs without hitting that 5% target. They think they can do it at 2.1%. The rest of the alliance doesn't really agree with that. We'll see how that shakes out. We'll see if there's any sort of conflict between Sanchez and Trump. And, of course, there's a little bit of friction possible with Emmanuel Macron and Donald Trump. Emmanuel Macron calling those strikes on Iran over the weekend against international law. So those are sort of the things that we're anticipating and looking forward to as we await Donald Trump, who should be arriving here in about an hour or so.
Oliver, good morning. The NATO Secretary General Mark Rutte is trying to smooth all this over. He's on a charm offensive with the President of the United States. We've seen maybe some embarrassing leaks around that over the last 24 hours. Is that working, though? Is dinner with the king and staying at the palace and making sure that we believe that Donald Trump is the leader of NATO and that he believes that he's the leader of NATO, is that all working? Are we seeing that strategy paying off?
Well, we're going to find out a little bit later today, Guy. I mean, again, Donald Trump will walk in here at about an hour, hour and a half, and we'll see if he makes any comments on the way in. What we'll all be watching very closely, Guy, is the way out at 3 p.m. when we expect to hear from Donald Trump again. I mean, listen, we know from all of the leaders across the world that strategizing around what will make Trump feel good is a very sort of important part of managing the relationship. So maybe if they can come in with good humor, they can get a better outcome. But again, this is a NATO alliance that Trump has been intensely sort of critical of. And when you think you've resolved one problem with Donald Trump, with the 5% defense spending, he opens up a whole other array of problems. On the way over here on Air Force Ones, he was asked about Article 5, whether or not the United States is committed to standing up to Article 5, and that is the sort of joint mutual defense pact if NATO is attacked. And he said, well, listen, that sort of depends on your interpretation of Article 5. There are different ways of reading it, and that maybe I'll stand up and defend my friends. He also said that he will give a comprehensive and full explanation of what his interpretation of Article 5 is a little bit later today when he is here in The Hague. So I think that is going to be one of the primary focuses for everybody here awaiting Donald Trump. We should also say that another thing he posted on the way over here on Air Force One was this poll that was taken among Republicans, both MAGA voters and sort of traditional Republicans. The question that was posed was whether or not they would basically support going to the aid of a NATO country if it was attacked by an external force, basically whether or not they support Article 5, and 71% of MAGA voters said that they would, in fact, supporting Article 5 versus 61% of traditional Republicans, which is maybe a little surprising. And when we think about the world that Donald Trump lives in, it seems that there are really only two things that can sort of amend his behavior and guide him. One is the bond market, and the second is potentially the MAGA base. And the fact that he posted that on the way over here is potentially significant, but we'll have to find out at 3 p.m. today local time when we hear from the President of the United States.
A little bit earlier than that, we're thinking he's going to make comments maybe in an hour's time with the NATO Secretary General Mark Rutte, and we will bring those to you live if we get them. Oliver Crook in The Hague at the NATO summit, thank you very much indeed. Sir John Sawers, former UK ambassador to the United Nations and former chief of the intelligence agency MI6, joins us around the table this morning.
Good morning, Guy.
Good morning. Article 5, is it reliable? Can we rely on it? What is NATO's purpose at the moment if we can't rely on it?
Well, Article 5 has been there since 1949. It held the Soviet Union at bay during the Cold War. There wasn't an absolute guarantee. It's still a decision to be taken by each country when they, as to what they do in response to a threat. But I think it has been very important. It has been questioned now because of President Trump is taking a more sort of transactional approach to this. Will he, won't he? He likes to keep the world guessing. We'll see what he says later today. But I think one of the reasons we're seeing this sharp increase in European defence spending is partly because Donald Trump is urging them to do so. It's partly because they don't really have confidence in America, and when Europe realises it's going to have to defend itself against a resurgent and aggressive President Putin.
Is Europe capable of defending itself?
Well, at the moment, frankly, on its own, against a full-blooded Russian attack, no.
What would it take?
Well,
is 5% enough? Are we spending in the right places?
At the moment, the Russians are completely bogged down in Ukraine. There's not going to be a Russian army capable of crossing the border into NATO. What we're seeing is a more hybrid sort of threat. You're seeing propaganda, you're seeing funding of political parties, which has been going on for decades in many ways, in order to undermine Western democracy. So there's a Russian threat to our system, to our way of life. Now, if there's a hard defence threat, Russian troops coming across the border into Estonia or into Poland, then that is a different sort of matter, and that's where you get the need for a common NATO response. Of course, NATO's Article 5 isn't just about America coming to Europe's aid. Article 5 is about all Europeans coming to each other's aid. It's a collective defence guarantee. Now, whether the Americans are there on the front line or not, we'll wait and see. But I think Europeans are improving their capability. But the fact is, NATO has been a broad alliance, and we've all depended upon one another. If the United States says it's no longer dependable, then Europe's going to have to do a lot more, and it will take a number of years in order to build up those capabilities.
Talk to us a little bit about the enforcement mechanism there. In the doomsday scenario where Donald Trump says, you know what, we're not going to honor Article 5 if the Baltics or if the Scandinavia part of the world kind of comes into focus, is there an enforcement mechanism?
Of course there's not. There's no way that Europeans can force America into the battlefield. It's a political a commitment, it's a treaty commitment, it's a convention, all these things which every US president since 1949 has upheld and maintained and supported, even if they might have had a few private doubts as to whether they really would go to war for an attack on Europe. But it was sufficiently credible to deter the Soviet Union and, until recently, their successors, Yeltsin and Putin, from doing anything aggressive in Europe. So there's nothing guaranteed in here, but it's a political assurance. It's not just to Europe, it's to Japan and South Korea and the Philippines, Australia and so on. Other countries which also depend upon US as being the backstop of their own defence. That doesn't mean the US is in the front line. Look at what's happening in the South China Sea at the moment, with the Chinese pushing out against the Filipinos. It's the Philippines which has to defend itself, but everybody knows, or has known up until now, that there's American hard stop behind Philippines' defence, and that's what's been the case in Europe as well. I hope very much that we get an agreed communique from the NATO summit and that Donald Trump's administration reiterates what all previous US administrations have done for the last 70 years.
I want to go right back to the question that the guy was talking about in terms of spending here. We just talked to the economy minister of Spain. They're pulling back on some of that by a good chunk, 2.1% relative to 5%. Do they have a point? Does Spain have a point that in this environment of security questions, of building debt for every single European economy except for Germany, do they have a point that maybe they can get away with 2%? What kind of precedent does that set?
Well, 2% used to be the target. That was set about 12 years ago. Yeah. That was the target for defence spending. Spain has always been a laggard on that. It has not had serious a threat to its territory from Russia or other aggressors. Its main problem is a security problem from North Africa with migrants coming across their border. I'm not defending Spain. I wish Spain had got to 2% many years ago and that they should be doing more now because there's a collective threat to Europe. So Spain has to defend itself. I'm not going to defend them. But what we're seeing is this 5% has come out of discussions. It is a bit of a hybrid figure. It's not just about defence spending. It's about general security spending. Here in the UK, it will include border patrols, border controls as well, and your broad defence against cyber and so on, which usually comes under the intelligence budget.
Yeah.
So it's adding a number of things together to make 5%. The hard defence commitment is 3.5%.
Yeah.
And if the Spaniards are saying they can only do 2.1%, well, that's not good enough. They're going to have to do better than that.
But do others follow? If Spain can do it, if Spain gets the exemption, does Italy follow? Does France follow? Does Belgium follow? Do the others follow?
Well, France is not following. I don't know exactly what Italy's position is. These are targets to be met over the coming decade. Keir Starmer in the UK has said we will aim to achieve this by 2035. That's a long way away. But the main point, Kriti, is that this is on an upward trajectory. All European countries are investing a lot more in defence, and we're seeing a country like Germany, which has been another laggard like Spain and Italy in the European defence spending, making a really serious effort to get armed forces which are state of the art and with good technology and able to play their full part in a NATO defence operation.
How much do we know about the Iranian nuclear stockpile at the moment?
Well, right now, very little. I mean, I doubt.
Does that mean we just go back to where? What have we achieved?
Well, I think what's been achieved is that the Israeli strikes have taken out a lot of the key personnel. They've damaged a lot of Iran's defence capability. On the nuclear side, it will take quite some time, I think, to assess how much has been damaged. Obviously, the Iranians had notice after the Israeli strikes started. They then knew there was a possibility of American strikes, so they would have taken out the most sensitive material, including the 60% enriched uranium, out of those deep bunkers and hidden them somewhere. Now, I think President Trump was right to take the decision he did. It was also right to hold the Israelis back from pursuing regime change in Iran. If you have regime change, you have total chaos. You've got no one to hold to account. You don't know what's going to happen next. There's still an Iranian government in place. They're going to have to consolidate their control again. But it's going to be really important that the Trump administration, the Europeans, re-engage with the Iranian leadership in order to get a political agreement, because you don't want to have to keep on going back in and doing these strikes over and over again.
Where does Israel fall into all of this?
Where does Israel?
Where does Israel fall into all of this? In terms of the next steps, in terms of surveillance, in terms of making sure that the nuclear program isn't accelerated now in the face of these strikes, how crucial is Israel to Donald Trump's goal?
Well, I think Israel is crucial to Israel's goal, which is the long-term defence of Israel. Now, I think all of us were impressed and surprised, and the Iranians will have been shocked at the scale of Israeli penetration of their security system, how much coverage they've had, not just recently. When I was chief of MI6, understanding what the Iranians were doing on the nuclear side was a really high priority for intelligence collection, and we worked closely with the Israelis at that time. But the Israelis have gone to another level in the last few years in terms of gathering actionable intelligence to attack individuals in the nuclear program and to have a fuller understanding of not just their enrichment activities, but their weaponization as well. And I think the Mossad will be very acutely focused on how the Iranians are going to behave over the coming weeks and months and what they're going to do to reconstitute that program. It's not going to go away. You can't destroy the know-how. We almost certainly haven't destroyed the partially enriched uranium that they've already got. But you are... this problem is not going to go away, but there's no doubt that Iran is weaker now than it was before. There will be some in the Iranian system who will say, yes, we've got to go for it. We've got to go for this nuclear weapon. But there will be others, wiser heads, I hope, who will say, look, this is a turkey shoot. You know, we've been exposed as having poor security. We need to rethink our entire security strategy and forget about Hezbollah and Hamas and these other groups and focus on having security at home, but more normal relationships abroad. Now, we were close to that 20-odd years ago when Khatami and Rouhani and Zarif and so on were the dominant figures in Iranian politics. We've gone through a great big loop, and now maybe we'll get back to that again.
All right. Former UK ambassador to the UN and former chief of MI6, John Sawyers, joining us this morning. We thank you so much. Coming up, we're going to get your stocks to watch ahead of the opening trade in just over 10 minutes' time. Stick with us. This is Bloomberg. Just over 7 minutes away from the opening trade in Europe. Futures pointing higher marginally, though. Let's look at our stocks to watch with Joe Easton from our equities team. Joe.
Morning, Kriti. So we're watching delivery stocks in Europe today after a drop in FedEx after the hours yesterday, given the company gave a bit of weak guidance on their deliveries and their main international parcel business. The earnings pretty much in line with expectations, but it was the commentary around the year ahead that sent FedEx stock down around 6% in the post-market. So we're going to keep an eye on DHL today over in Germany, also InPost, bpost, all of them exposed to the delivery market, particularly with the big parcel business at DHL, Deutsche Post. That one potentially going to be in the eye of the storm for this market today. Then we're also looking at Babcock in theme with the NATO Defense Summit going on. Babcock announcing it's going to return more cash to shareholders, around £200 million in a buyback, and also ramp up its dividend payments as well. This is the company that makes the US and UK Navy ships and also does a lot of training as well. We can see that stock rallying over the year today in line with the rest of the sector, and it recently joined the FTSE 100 as well, and this looks like positivity once more for that company. Then over in autos, we've got Stellantis, an upgrade over at Jefferies, which says some of their new products in Europe are actually starting to do a bit better than expected, and also some destocking in North America, helping the company. Keep an eye on Stellantis in Italy this morning.
Joe, great stuff. Thank you very much indeed. Joe, setting us up for the session ahead. We are going to keep an eye on what is happening with the commodity story as well. Looks like oil's picking up a little bit. We'll keep an eye on what is happening with the gas future story as well. The opening trade is 5 minutes away. Looks like we're going to see a fairly flat open. We have a firm eye on The Hague and what is happening at NATO. We'll continue to cover that story for you. This is Bloomberg. Couple of minutes to go until the opening trade this morning. There's a bunch of things happening today. We are focused very much on what is happening in The Hague at the NATO summit. You're looking at live pictures coming from there. We await the arrival of Donald Trump. We are anticipating in the next hour Keir Starmer getting out of the car, the British Prime Minister. We are awaiting the Rutte Trump opening remarks. We think they're going to come in around 50 minutes' time. We will bring them to you, but it'll be interesting to see what the British Prime Minister says in a couple of moments. I suspect he will be answering questions. We'll maybe come back to that in just a moment. Let's talk a little bit about what we're anticipating from the markets. A relatively quiet morning, I think, is what we're going to see. This was the situation yesterday. A little bit of a fade, actually, into the close. White line is Europe, blue line is America. We rally in the States. Remember, we see the Nasdaq hitting all-time highs. The equity market story continues. Volatility remains low. Momentum is there. How long does that persist for? We'll answer that question in a moment. Futures fairly becalmed, though, this morning, as you can see. Euro Stoxx futures 50 up by 0.2%. FTSE's absolutely flat. DAX is up by around 0.3%. A little bit of a gap to price in, maybe, when it comes to what we are seeing between Europe and the United States. There's a few single stocks that are worth focusing on as well this morning. Defence will be one of those areas we'll watch out for, Kriti, but there are a few others as well.
Absolutely. Defense for sure. I mean, this is important. We just had an interview with the Spanish economy minister. There's a question here about whether defense spending promises are actually pulled back. There's already a question if we would hit that 5%. How do the markets respond to that? Of course, auto's also in focus because in addition to the defense story, we're keeping one eye on European car registrations and what that market share actually looks like from European automakers versus Tesla versus BYD, et cetera, et cetera. We're going to dive into the details. And of course, one eye on Spanish banking, always BBVA and Sabadell digesting the announcement from Carlos Cuerpo himself yesterday, Guy.
Absolutely. Right, here we go. Wednesday session. Let's take a look at what we are going to see. We are anticipating a fairly quiet start. European markets are open. The opening trade gives us a FTSE 100 that is absolutely flat as a pancake right now. That is kind of what we're anticipating to persist, actually, throughout kind of the early parts of the session. Elsewhere in Europe, you may see a little bit more of a bid, but not by much. You're not talking about a big rise today. The Stoxx 600 is up by 0.1%. Same for the Spanish market this morning as we digest the defence story there, what is happening with the 5% or 2.1% according to the Spanish, and what is happening with the banking sector as well. The French market's up by 0.2%. The German market's clearly got nothing going on because it's already open and is up by 0.3%. Feels like we're in a kind of holding action today, but there are plenty of more catalysts potentially coming. We're waiting to see what happens next in the Middle East. We're waiting to see what happens with the trade story. That is accelerating towards us at a rapid rate. And today, we very much focus on what is happening with the defence story, Kriti. What's happening with the sector story and the single stocks?
Well, it's a fascinating one because right at the top of my screen, I'm seeing two major sectors that are leading, and that is technology and that is defense. No surprise there. It is quite literally a defensive rally on our hands, but a marginal one, higher by, to your point, only 0.2% on the broader benchmark. Your biggest contributions, weights to the upside, whatever you want to call it. ASML and Rheinmetall are two of the biggest ones, which I think really tells you where this market is headed and the fact of how heavily this NATO summit is playing into these markets. To the downside, though, I'm seeing a lot of healthcare stocks that are taking a beating. BBVA, for example, also one of your weights on this market as well. So really going to keep an eye on this. But to your point, a mixed one in terms of sectors.
Yeah, you've got 353 stocks up, 207 down, 38 unchanged. You're not getting... it's a reasonably balanced market. It doesn't feel like it's a market that's got huge amounts of catalysts associated with it. It's interesting that Rheinmetall is up, but Kongsberg Group, for instance, is down. Even the defence sector is reasonably split. You're seeing, as you say, some of the heavyweights, Novo, Nestle, L'Oreal, adding to the downside. The mix on the upside is fairly eclectic as well. ASML, HSBC, Ferrari and Siemens within the top four stocks. I'm struggling to find a clear sense of direction that I can take away from all of this. Even within sectors, you're seeing a fairly decent split. Engine makers are up, Rolls-Royce and Safran both catching a bid as well.
This feels like a hodgepodge kind of day. A jambalaya of stocks is, I think, what I'm going to call it.
Okay. Jambalaya.
Yes, a jambalaya.
That's the first time I've ever heard. Yeah, but it's the first time I've ever heard it used on air to describe the stock market.
Bringing a little southern flavor to the European opening trade. Let's talk a little bit about these markets, though, and how you navigate it. Of course, geopolitics are front and center. Banu Baweja is all over this conversation. Chief strategist over at UBS joins us this morning. What do you do in this market? Where do the next leg of gains or drop come from?
I think you've got to be a little bit careful, just given the fact how far markets have rebounded, right? Going into July 9th, there is no tariff fear priced into the market. So if you look at a basket of stocks that primarily get their revenues from abroad, so these would be the most tariff-impacted stocks, you take away from that the impact of all macro variables, and what's left on the table is the tariff impact. And on a scale of 0 to 100, tariff fear is at 0, right? So this is very different from where we were on April 2nd. Extremely different from where we were on April 9th when the markets bottomed out. At this point, tariff fear is back at 0. And on July 9th, we may get tariffs going up, going down, we don't know. But at this minute, what we do know is that tariff fear is completely priced out. So given that this market has already climbed significantly higher walls of worry, given where we are going with tariffs on July 9th, we think it is, the caution is what is warranted right now. So at this minute, we won't be chasing the markets higher. I recognize that we are within touching distance of all-time highs on the S&P. I'll be there on the NASDAQ. We're 1% on there. But hard data is now beginning to get impacted. It's really interesting that the gap between hard data and soft data is at 27-year highs. Our numbers are telling us that hard data implies global growth at 3.6%, which is slightly above average, and soft data implies global growth at 1.5%, which is deeply recessionary. And that gap is likely to close with some early signs that hard data is now beginning to get impacted. I don't think that's priced into the markets. I don't think there's any tariff fear in the markets. Ergo, we are a little bit cautious on equities on both sides of the pond right now.
That's almost verbatim what Jay Powell said yesterday in terms of the hard and the soft data and the tariff read-through. But my question to you is, what is a more dangerous outcome here when that tariff data and that tariff impact does actually hit? Because it will, inevitably. Is it if corporates absorb the costs? Is that the bigger hit to equities? Or is it that the consumers passed on and it's more of a demand hit? Is that the bigger hit to equities?
See, the margin hit, so it's a great question because margins are at about 90 percentile of their history, right? I think the consumer hit is going to be much more dangerous because if we find that quite a few of these the tech companies that have led the gains are actually quite cyclical, we find that Meta, Alphabet, Amazon are actually quite cyclical. If the US consumer begins to get hit and we begin to question the hegemony of these big AI companies, that I think will be quite a big hit for the US market. So I think the channel that we really need to watch is real disposable income. That has been very strong in the last several months, but you could see a hit both through nominal wage growth coming down and also through prices going higher.
Susie Wiles has just arrived at the NATO summit, the White House Chief of Staff. I'm assuming that Donald Trump will follow fairly shortly. Whether or not he comes in through that route I don't know. That looks maybe a little open, a little public, but we will continue to monitor what is happening at NATO. You've got this tension between Europe, Banu, and the United States on tariffs, on defence spending. Again, the market doesn't seem to know what to do with it. As you say, it's pricing the tariff story at zero. Do I need to think more? When I think about Europe, do I need to think about the fact that it's going to have to defend itself, that it's going to have to spend more money? And is it a choice between guns and butter? And I just kind of, I don't know where Europe goes next in terms of its fiscal position.
It's a great point, because not many people speak about the choice between guns and butter. They just think more guns equals to more growth equals to great for the long term. Actually, I think you're absolutely right. I think there is a choice in fiscal terms between guns and butter. So the more we spend on defense, the less we spend on others over the long term. Today in Germany, we don't have that problem, because Germany is just increasing its expenditure on transport, on infrastructure, and on defense at the same time. Now, this is being reflected to some extent in the defense stocks. The rotation away from the US into Europe, I think, is going to be a temporary rotation, right? Because at this minute, if you look at the cyclical data in Europe, that's fine. In fact, at the margin, getting very slightly better. But the cyclical data in the US, and I really want to sort of be at pains to sort of elaborate on this, I do think that cyclical data in US is deteriorating. Soft is extremely weak, hard is deteriorating. So I think that will take precedence over the next 3 months. The S&P is more in harm's way than is Euro stocks. But beyond that, it's really hard to argue that the value trade is going to do well over the next 5 years.
Sure.
And you do need the value trade to do well for Europe to outperform US over the secular horizon. So I think this is a tactical rotation into Europe. I don't think this is a secular rotation.
I hear all you're saying, and it sounds completely logical. The problem is, if I'm a PM, I'm an institutional portfolio manager at the moment, I'm underperforming. The market is doing okay and continues to defy all expectations in terms of what is. Isn't there a danger at some points that PMs are just going to, I've got to chase this?
Everybody gets stopped into the trade. There is that danger. But I think if I were a PM today, so first, all institutional investors are quite bearish right now. Most retail investors are just following the strategy they have followed from 2020, which is to buy the dip.
And it's working.
And it's exactly right. So those folks are winning. CTAs are winning. The momentum trade is winning, right? Except at this minute, as I said, the cyclical data is turning in the US. The hard data is beginning to get weaker. You see that in orders. You see that in consumer spend already. We have PCE on this Friday, but retail sales was already weak. The details of NFP are weak enough that
it's coming slowly, though. That's the problem.
I think it's actually now it's coming. I think the markets are up because we have climbed that wall of worry in the Middle East, and oil prices came straight back down. I think that's why the markets are up. I think we'll struggle to go well past the highs. And I think the risk-reward really is skewed, I think, in the next 1 to 3 months. Not over the secular horizon, but in the next 1 to 3 months, it's skewed to the downside, because I do think earnings expectations, if you look at earnings expectations, over the next 3 years, so we have data all the way till 2027 Q2, a CAGR of 11.5 to 11.6%. That's very high numbers. And this is not just the Magnificent Seven, by the way. Of course, that's the higher part. But if you look at the not-so-magnificent 493 companies, even there, the CAGR is about 9.7%, which is a very high number. It's at the higher ebb. So markets are extrapolating the very strong growth we have seen in the US since 2021. That's what's being priced into earnings out here. That's what's being priced into margins. I think the consumer in the US is likely to weaken. I think investment sentiment, both residential and non-residential, with this degree of uncertainty, I think it's going to be weak.
But Banu, markets don't follow reason, to your point. They're not looking at earnings expectations on a day-by-day basis. And when the volatility hits, the momentum trades go into a defensive play, whether that's technology in the United States, to your point, or whether it's defense here. It's ultimately a liquidity story, the hyperscalers in the States or federal contracts here in Europe. What is the defensive trade if both of those two sectors take a bigger tariff or geopol hit?
Yeah, so if you look at the liquidity story in the US, again, a lot of retail inflow, a lot of CTA inflow, and that has supported the market. And I think that will likely continue. But I think at this minute, given that economic data is turning, I think the pessimism of institutional investors will overwhelm the sort of optimism or sort of buying the dip attitude from retail investors. I think that is likely to push the market a little bit lower in the near term.
What happens, there's a bunch of defensive trades out there that people think are going to be reasonably immune to that turn once a week. Gold appears to be one of them. Yet my experience over a multiple series of cycles is that even gold gets sold. And what I'm hearing in the market as well is that there's a mismatch between allocated bars and unallocated bars, and you're going to end up with some sort of a squeeze because nobody's going to be able to... The unallocated bars, there's going to be a problem, and you end up effectively with a run in the gold market. How crazy could things get?
If you look at how gold has performed in the last 3 or 4 years, which of course has done extremely well, this is gold on a bad day, because gold has done this despite the fact that real interest rates, which is the single most important driver of gold, has been going higher. I think life for gold changed the day the Central Bank of Russia was sanctioned in 2022. Right? Since then, global central banks, global supranationals, sovereign wealth funds, and large pension funds and real money managers have been asking themselves, what is money? If gilts, bunds, treasuries can be taken away from somebody's reserve, what should we be buying? They don't have a great answer, but they do have one common answer, which is to increase allocations to gold. Retail in China is doing that. Retail in India has always done that. I think real money is doing that, and I think supranational central banks...
You have to be able to drop it on your foot and go, ow, for it to be real, though.
But I do think that gold has got another 10-15% upside from here. And precious metals as a whole, I don't think they're frothy, right? I mean, look at the gold-silver ratio. Yeah. Usually when you see froth in precious metals, you see silver massively outperforming gold.
My question really is, how do I buy it, though? Is there a mismatch within the market? And could we see some dislocation?
I don't think we should be buying it only through the miners. I think the miners will do well, but I think physical is where it's at, and I think that part of gold will do well. I think the miners will follow up, but I don't think this is a financial trade. I think this is a physical trade in gold. I think we should be looking for another 10-15% upside. So that's how you play defense. And what's happening, I mean, going back to Kriti's point, is that cyclicals have significantly outperformed since April 9th, right? Whereas the economic, I mean, cyclicals are implying ISM at about 63. Yeah. ISM is is 50 or sub 50. So I think that short covering trade has already taken place. So this is why I'm saying that we have got to be a little more cautious at this minute. I think retail and CTS is what has driven it. You give it a little bit of vol. July 9th could be a vol trigger. You give it a little bit of vol, and the momentum trade can turn, and that's why I think we have to play defense at this minute.
It's always great to see you. Thanks for stopping by to see us. Braže, Chief Strategist over at UBS. Quick look at the core six before we talk about some single stocks that we need to be focusing on this morning. This is where we are at the moment. Reasonably becalmed markets. It's interesting to see Ferrari catching such a bid this morning. I just wonder whether that's... I'll come back to that. Is that part of what is happening with the European-US trade story? I don't know. Airbus, some of the airlines, some of the aerospace companies are on the move as well this morning. Let's get some more details, talking of which the defence trade is certainly one to focus on. Babcock on the move. Joe's got the details.
So we have got Babcock in focus, as you say, Guy, really on trend with this NATO summit going on. Babcock in their earnings today, upgrading their margin target, beating on sales, and also announcing a £200 million buyback and lifting the dividend as well. So smashing estimates across the board. This is a submarine maker and Navy ship maker that joined the FTSE 100 just a couple of months ago. So it's doubled in value already this year and up another 14% for Babcock in the defence sector. So really a strong one on that one. Then in the renewable space, it's a back and forward in terms of the policy outlook over in the US, but the latest reporting suggesting there could be some watering down of some of the measures that we're going to cut tax credits for the renewable space. So we are seeing a bit of a rebound once again in this sector. So Nordex, Ørsted, Vestas, EDP, all of them gaining on this, but it's kind of, as I say, a back and forward on that one. But for the moment, it's a little bit better in terms of sentiment. Then a stock really hit hard over in Paris today is Worldline. Now, there was some reporting out saying that the company potentially being looked at in terms of some of its accounts once again, which was related to compliance and regulation, something we saw a few years ago for the firm. But the company has put out a statement today, Worldline, saying that they have followed regulations and are going to comply with those probes that are going on. So Worldline hit today, down 10%, a bit of a shock for that one. Then in terms of delivery, we had the update from FedEx yesterday, pretty weak in terms of the parcels, potentially a bit of a tariff impact and how that's going to affect the international deliveries business. So seeing a bit of a move lower today in Deutsche Post, coming down nearly 2%. Not too much movement in the others, but Deutsche Post, DHL, the big rival, getting a bit of a hit, following FedEx. And then a couple of morning calls, as we mentioned earlier, Stellantis getting a buy over at Jefferies. A lot of that related to the new products in North America and a bit of destocking as well. So a decent gain for that. And we're up 3%. And as Kriti mentioned earlier, we did get that data on EU car registrations. Keep an eye on that as well. And finally, WPP. This comes down to underweight at Barclays due to uncertainty on the strategy after the CEO recently stood down. So Barclays says that is a risk, and they go underweight. WPP down 1% in London this morning.
All right, Joe Easton from our equities team, we thank you so much. Coming up, we're headed right back to the NATO summit. Can those leaders agree to hit Trump's defense spending target? We speak to Latvia's foreign minister coming up next. Stick with us. This is Bloomberg.
Heads of government continue to arrive at the NATO summit, which is taking place in The Hague. We await the arrival of Donald Trump. The US president will be with us shortly, we anticipate. Let us turn our attention to some of the other nations, though, that are in focus. Oliver Crook is covering the event for us from The Hague. Let's go to him now.
That's right, Guy. We're awaiting Donald Trump really in the next 30 minutes to arrive here. The person for whom everybody has been waiting, and really sort of the declarations that he has to make about this new renewed commitment from the NATO allies that we expect to commit to 5% of GDP on defense spending. And I'm very pleased to be joined by the Latvian Foreign Minister, Baiba. Braže. Thank you so much for joining us on the sidelines of this event. I'd like to begin with what we're expecting in the next couple of hours, this agreement to spend 5% of GDP on defense. Are you concerned about the timeline? Because this is over a 10-year period of time. There has not been a commitment to do it sort of every single year increments. Do you think that that might be a way to get around some of the spending for some of the countries involved?
I think it's important to have that flexibility because, yes, Latvia, the Baltic states, Poland, a number of others will reach the 3.5%. We have reached 3.5% hard military spending, hard NATO definition military spending already. We will go to 5% next year. But for the others who have already quite significant capabilities, for them to reach NATO defense capability targets, because each country have a specific list of targets that they need to reach, whether that's air defenses, long-range fires, and so on and so forth, it's first necessary to produce them, to have them, right? So it's not like tomorrow at lunchtime you can have what you have written on the paper. So that's why also when leaders agree a declaration in a few hours, it also provides for the annual evaluation of that commitment and how the implementation is going. So this is very important because it allows sort of flexibility in time, because you can have maybe more one year, something less next year, depending on the production capability. But it's also defense industry, because it's not enough just to have money. It's not enough to have 155 munitions that is costing 2,000 a few years ago. Today it costs 8,000. So you can raise defense spending as much as you want. If there is no industry producing at scale what we need, then we have a problem.
And one of the comments that Donald Trump made on his way over here on Air Force One was sort of questioning the commitment to Article 5. There are different interpretations to Article 5, saying that he might support some of his friends, that he'll give a definition of that. Is that sort of rhetoric? Does that concern you?
I mean, there's an ironclad commitment by the U.S., by everyone. It will be confirmed in the declaration when it's accepted. But again, the task of the NATO alliance, as the strongest defense alliance, is to make sure that we have all the intel information, that we have the situational awareness, that we have everything in place on our side in planning against possible Russian threat, because that is again confirmed as a main threat to Euro-Atlantic security, that we don't even need to reach the situation where Article 5 needs to be involved.
Right.
So it's secure, the chief of the armed forces, the supreme allied commander, it's national military commanders, political leaders, who really have to be in the culture of readiness to make sure that both our forces, our intel, our internal readiness, because what Russia is doing, a lot of sub-conventional activities and attacks in our countries, that it's all there, because Russia is constantly testing us. Are we ready? Are we ready? Do we understand what they are doing? So catching them early is very important, and then no need to discuss Article 5.
And we're expecting a meeting with Trump and Zelensky today. What would you hope to come out of that meeting? What do you see the U.S.'s role in this going forward? And as they step back, as we anticipate, what does Europe now need to do?
Listen, let's wait for the meeting. I'm sure they will come out and say themselves, but the fact that President Zelensky is here, he was at the leaders' dinner last night. He has had extensive public and political engagements. it's a very clear message. Ukraine's self-defense is important for NATO. Strengthening Ukraine's capability is important for NATO. But also learning the lessons, integrating in our military and political decision-making what we see, how Ukraine is able to counter nuclear weapon states with 140 million inhabitants versus Ukraine's 40 million. For more than 3 years, Russia has not been able to reach its objectives in the war.
And also important for NATO will be the fortification of the eastern flank of NATO. Poland and the Baltic countries have asked for more money to help finance that from the European Union. Do you think that you will get that money? Do you think you'll get more Europeans on board to finance that?
Interestingly enough, also Norway was for the first time last year awarded EU funding to strengthen its border with Russia. Finland is doing that, the Baltic states, Poland. So it's, you know, it's the whole northeastern flank that very clearly is strengthening both the sort of border in civilian but also military terms, so anti-mobility, early warning, technological investment. We have built a fence on our eastern border, both with Russia and then Belarus, because quite clearly we realized that it was not only about military issues, but also instrumentalization of migration, and that's another task.
Do you think that the EU will help finance that? Do you think that you'll get more countries on board?
The EU has been financing
in a more substantial way.
More than 90 million euros have been invested from the EU common budget, but nationally we invest a lot.
And then a question on Belarus, because we saw a number of political prisoners that have been released, some of them being Latvian. Can you give us an idea of kind of what is going on here? Do you expect that there will be a rolling back of sanctions potentially?
We have thanked President Trump for the push, and his special representative Kellogg and Jim Cuomo for all that they've been doing there, and John Cole, because we also have political prisoners. We still have not released everyone that they hold. Belarus holds more than 1,000 political prisoners altogether, not only Belarus people but also others. So this is the first step. It's a good step. And we have asked for the US to continue and to push Belarus leaders to really make sure that political prisoners are released. And now we don't have a pressure on the sanctions or something else, but that's something that Belarus authoritarian regime needs to understand, that we will not rest. We have people who are arrested unjustifiably, and they should be freed.
Well, Baiba, Braže, thank you so much for your time. That was the Latvian foreign minister here on the sidelines of the NATO summit, as we expect Donald Trump to arrive really within the next 30 minutes.
Bloomberg's Oliver Crook in The Hague, as he said, talking to Latvia's foreign minister. He has a slew of other interviews. He's going to keep us posted throughout the day. Live coverage on the ground from The Hague. Coming up next on the program, we're going to dive into the market impact when it comes to defense stocks specifically. If you start to see a pullback in spending away from that 5% target, how does that show up into a market that's considering it a done deal? We're diving into the details next. This is Bloomberg. This is the opening trade. Welcome back. We're about 30 minutes into today's session. Green on the screen across the board. Stock 600 is starting to pick up a little bit of momentum, but only higher by 0.4%. Your outperformer this morning is the CAC 40, and that kind of makes a lot of sense. The underperformer in the last couple of sessions outside of the FTSE 100 and the oil story has been the French index. So perhaps a little bit of steam getting picked up there. We are, of course, live covering from the NATO summit from The Hague as well. We have NATO leaders arriving ahead of, I think, the big one, which is, of course, Donald Trump. We're also hearing currently at the moment from the Belgian prime minister. He was currently at the prior to him. We were hearing from the Norwegian and the Finnish presidents as well. Guy, really talking about, how far and how quickly they can get to these defense targets.
Yeah, I thought the conversation that Ollie had with the Latvian prime minister just a few minutes ago, really interesting as much as she said, yeah, we can spend more, but the cost is going up. Yeah. So therefore we spend more. Do we get is there a kind of, what is the relationship between spending more and getting more kit, I think is one of the key questions. And Europe faces this challenge of building the industrial base as well. You want to be able to spend more but get more. Yeah. And that's the challenge that Europe now faces after years of underinvestment in building ammunition, in explosives, in all the kind of stuff that we now need. Costs are rising quite dramatically. The inflation rate within this space is enormous.
Not only costs are rising, but there's a lot of pressure on budgets right now. There's massive debt loads. We're revisiting dynamics in certain markets from 2011, 2013. We'll see if that sticks.
Yeah, it's pretty obvious. You can see that margin story in the next chart we're going to show you, which is European defence stocks just outperforming. The number of orders that are coming through, I think Rheinmetall got another one this morning. We saw it at the Paris Air Show very strongly last week. That was a really strong theme, that orders are coming through thick and fast. There are differences depending on you're a German manufacturer, an Italian manufacturer, Leonardo, for instance, or whether you're Thales in France or Dassault. It's really interesting. But this is the picture. You can look at what is happening with the defence basket and what is happening in Europe right now. The purple line there is the stock 600, and you can see that line is firmly at the bottom. So let's get a sense of kind of where we go from here and whether or not the outperformance that we've seen out of this space is going to continue. Benjamin Heelan, head of European Industrials Research at Bank of America, joins us now to discuss. Ben, it's been a great run. European defence stocks have had a fantastic run. The orders have been coming in. That's been priced into the stocks. Can it continue?
I think it will slow down, right? After the performance that we've had in the first half of the year, we're not going to have a similar level of performance in the second half of the year. I think what you will see in the second half of the year is you mentioned a little bit there about budget pressure. We're going to see a big debate about which countries are going to get to these targets and by when. I was at the Paris Air Show last week, and one of the big recurring themes was Germany. The Germans want to spend the money, right? And they want to spend the money quickly. We saw that with the budget last week. And so if you have exposure to the German government, I think you can expect when that budget gets approved in September, you are going to see material order momentum. You're going to see a lot of prepayment support to help with that CapEx build out. You guys were just talking about kind of building out the defense industrial base there. But if you have exposure to some of the other governments, whether that be France or Spain, where the speed with which you're going to be getting to those defense targets is definitely in doubt, there's going to be a bit more of a question mark around there. The other element, I think what we've seen is it's been an acutely European story in the first half of the year. I think in the conversations I'm having with companies and with governments, it's becoming a much more global story. Lots of focus on Japan and India and Australia. And so I think what you will also see is we will see a much more focus on the capabilities in the second half of the year, where there is a real structural shortage, air defense, missiles, relative to just tanks and ammo.
Does Europe need all its defence companies to continue doing what they're doing right now? I asked the question. I had a conversation with Eric Trappier, CEO of Dassault, at the Paris Air Show. And he basically said, we're prepared to go it alone. We have a French requirement which will build the next generation of aircraft for, the next Rafale or whatever they're going to call it.
Yeah.
Is Europe spending wisely at the moment? Yes, we want to increase defence budgets to 5%. But are we getting enough bang for our buck in Europe when we spend that 5%? There's no point spending more money if we just get less in return for that. Where does the rationality come from in Europe? Where does it get delivered from in terms of allowing Europe to rearm itself, but to do so at a sensible price?
Yeah, I understand that point of view from the Dassault perspective. The reality is that a lot of the intellectual property in developing and designing a 6th-gen fighter jet program lies with Dassault, Safran, Thales in France. The challenge is that France doesn't have the budget flexibility to be able to afford these capabilities standalone, right? The reality is that developing a 6th-generation fighter jet with a significant autonomy component is going to be an extremely expensive venture. And so I think that, they're going to need cross-European support in order to do that. Where are you seeing that rationality come in? So as an example, the Rheinmetall-Leonardo joint venture, which was announced last year, where they are building a land vehicle center of excellence, essentially in Italy, is a good example of how you can collaborate across different governments, bring intellectual property together, and basically build a platform in Europe that you can export from. There's a lot of synergy. So while that's not cross-border consolidation with one company buying another, it is effectively consolidation because you're putting the best parts of a Rheinmetall vehicle in with the best parts of a Leonardo defense electronic system, building a great product that can be leveraged across Europe and also exported. So my view is you'll see a lot more JV structures announced in Europe over the next couple of years. You've seen Rheinmetall announce things with Lockheed Martin, with Anduril, just at the air show last week. And I think that's where Europe is going to go rather than consolidation, because to your point, we need to drive more efficiency in the defense industrial base in Europe. The money is growing, but it's pointless growing if we're just going to have 52 different types of battle tank in Europe. That is not going to be about getting the best bang for our buck.
Well, Ben, as you were speaking, we're hearing some comments here from the Belgian Prime Minister saying two key things. One, that the U.S. is currently focused on the Indo-Pacific. That's something we've heard before. But also saying that if Spain can fulfill their targets under 3.5%, we can try too. And Ben, this feels like a dangerous precedent that Spain is setting, to your point around the deficits, around the budget constraints there as well. My question to you is, if we do start to see more of these countries fall in line below that 5% target and eventually get there, does that set us up for some sort of correction when it comes to the defense sector? Are we looking at a drop in the very stocks that have driven this rally?
Yeah, look, the reality is it's an absolute risk, right? I mean, it is a risk. You know, we had this 2% target since 2014, and there were only 4 countries that were meeting that objective, right? And that's why I mentioned at the beginning of my remarks that funding, which governments are really going to get to that 3.5%, I think is going to be a big debate. Now, if you asked me 4 or 5 weeks ago, do I think Spain is going to spend the 3.5%? I would have said no, right? And I don't think Italy gets there. I don't think Portugal gets there, and there's going to be a debate around France, right? In the UK, obviously, we have committed to the 3.5%, but that's in 2035. We've really pushed the timeline around that. And so I think which governments are going to get there, Eastern European governments are clearly focused on getting there, and a lot of them are already there. The German government are clearly focused. We saw that in the budget that we announced. But yeah, geographic exposure of some of these defense companies is going to be a big focus in the next couple of quarters and years, right? And I can see that, you know, if you have significant exposure to one government that is decided they're not going to get to the 3.5% versus other governments, that's going to be a key theme in the market. So there is risk around that, yes.
Ben, in the Draghi report, when the concept of defense spending was, I would say, reintroduced and really taken hold of by a lot of European leaders, there was a line in there that said 70 to 80% of European defense spending is ultimately leaked back to the United States. Obviously, this is something that European leaders are trying to address. But that's still the level we're operating here at, that if these European governments do end up spending, 70 to 80% is leaked back to the States?
No, so we don't think it's really that high. I think those numbers were skewed by the F-35 orders that came in the wake of the Ukraine invasion. As an example, France procures basically 99% of everything from France, right? You know, that we have a lot of these capabilities in Europe. But I think, look, there are basically 3 capabilities, right? Which is basically missile defense across the Patriot system, the HIMARS rocket artillery system, and then F-35. Those are capabilities that we don't really have like real competitors of right now in Europe. And so we are still going to be reliant on the US and that US relationship for some of this high-tech equipment. We don't have a stealth fighter jet. The F-35 has shown over the last 3 months, 4 months, significant capabilities that we just don't have in Europe. It's going to be a lot of reliance on the US for the next 3 to 5 years. At the same time, there is still a very, very strong Buy Europe mandate. There is a very strong build the defense industrial base mandate. And so that's why I think you are seeing these US companies starting to investigate these joint ventures, Rheinmetall I mentioned with Lockheed and Anduril, as a way of maintaining access to the European market on a 10-year view. So there's still going to be some reliance, but I don't think it's anywhere near where those numbers are.
Benjamin Heelan, head of European Industrials Research over at Bank of America, joining us this morning. We thank you so much. It's a crucial time, Guy, when we're talking about the defense sector. And I think this is a really important one that we're talking about here because, of course, we are having a question around the spending story, but we're also awaiting comments from Donald Trump. He is at the NATO summit. He's due to arrive at the actual venue itself, so we are awaiting that specifically. This is going to be crucial in terms of whether or not he is actually able to make sense of this 5% and actually able to get some of these questions on board, especially in the face of Spain. Now it's kind of throwing some cold water on the idea that they're going to get to 3.5%. They're pushing for 2.1. We just heard the Belgian Prime Minister there, Guy, talking about as well the idea that they might follow suit. If Spain can do it, we can do it too. How long before that catches Donald Trump's ire?
Absolutely. We're about to find out. He is arriving, it looks like, at the NATO summit in The Hague. We are awaiting his comments. He will be making opening remarks with the NATO Secretary General. We are anticipating that those will be coming very, very shortly, potentially within the next 8 minutes. But we have just now seen the beast arrive. The car is in front of the building where the NATO summit is taking place, so we can anticipate that those comments will be coming pretty shortly.
Absolutely. And speaking of maybe an early indication of what Donald Trump may or may not say, we are getting headlines from Politico here. Marco Rubio commenting in that interview, just as we're speaking there, that Spain's NATO exemption is, quote, a big problem, and Spain that it is not sustainable. Again, those comments coming out of Politico. In the meantime, let's get some market analysis about how we should be thinking about this space. Markets Live executive editor Mark Cudmore joins us this morning. Mark, walk us through what the defensive trade in this market is. Is defense still a defensive trade? Your take.
I'm not so sure it is a defensive trade, given that the exceptional surge we've seen in some of the valuations of those stocks. This has been a long-running narrative, and I actually think it's quite a bullish and aggressive story. You know, we're talking about the kind of quibbling about what Spain will get to in terms of percentage of GDP spend, but the overall story here is that Europe is moving to a much more aggressive fiscal spend on arms over the next decade, or potentially longer, than it was only a year ago. And I think this is a really, really big structural tailwind for Europe in terms of that fiscal expenditure. Now, the slight qualifier to that is it's going to take a long time to come through, and there's a risk that some of those sectors might get a little bit too ahead of that investment because it's very much a structural tailwind rather than a short-term tailwind. And there are certain stocks that have traded the story as if it's about to all arrive in the space of the next couple of months.
More broadly, can Europe continue to outperform the United States? I find it fascinating that we've stopped doing it over the last 2 or 3 weeks. European equities have been going sideways. Europe is struggling to keep the momentum going. Mark, I've seen so many European rallies fizzle out. How close are we to that happening once again?
It's really important to answer this question whether you consider the currency side. So if you think of a dollar investor buying European stocks unhedged on their currency exposure, then they've made, over the past 5 months, I don't have my monitor in front of me, roughly 12% on the currency exposure alone, ignoring how the relative stock markets have done. And I think that'll continue to be a tailwind going forward. And part of the reason why I very strongly believe that US stocks will continue to underperform, as they have for the past 5 months, is because of that currency side, the longer-term dollar depreciation. So over the last 5 months, we've seen, US stocks are back at a record. They're very close. So they've done basically flat. But the rest of the world has added about $8 trillion in value. And that $8 trillion of underperformance for US stocks has basically largely come from the currency side as playing a part. So if you assume as a US investor you're going to buy European stocks unhedged, I think they'll continue to outperform US stocks, yes. But if you take it into pure performance in local currency terms, no, I'm not sure European stocks can sustainably outperform US stocks.
Mark, in our last 40 seconds or so, what did you make of Jay Powell's comments yesterday around the tariff impact?
Look, I think it's one of these classic situations where he's being forced to say lots of things because the questions that people are dying to interpret sentiment. But essentially, he didn't really stray from anything that's been communicated before. I think there's a market that is keen to see that the Fed might be going to cut. What is perhaps most interesting is we're starting to see a very divided Fed. It was the comments from other officials at the same time, kind of contradicting Powell, that shows this is a Fed. Some of the Fed members are really feeling the pressure from Trump, inclined to cut sooner. But it's absolutely a divided Fed, which makes July very exciting.
Yeah. Another factor to throw into these markets. Great stuff, Mark. Thank you very much indeed for holding with us this morning. Mark Cudmore. Remember, you can get all of Mark and the rest of the team's commentary around what is happening in these markets, live blogs, MLIV Go, on your Bloomberg terminal. Coming up, we're going to take you back to the NATO summit. I think President Trump is in the building. We will come back. We anticipate that he is going to make comments with the NATO Secretary General. We will bring those to you live in a few minutes' time. This is Bloomberg. Welcome back. You're watching the opening trade. We are 49 minutes into the equity market session, which is doing absolutely nothing at the moment. As you can see, a little bit of underperformance coming through in the London market, if my eyes are not deceiving me. And in terms of elsewhere, you are looking at a market that is basically drifting sideways. It's a similar story for some of the other asset classes as well. We've got oil picking up a little bit, but basically we are, after a strong start to the week, just holding ground a little bit now as we await what is the next catalyst. Maybe that comes from the NATO summit. We're about to hear from President Trump, potentially.
It's fascinating because already you're getting some pretty sharp commentary when it comes to the idea of just how much spending is enough spending. And Spain has really thrown a wrench into those conversations. Already hearing Marco Rubio make some of those comments to the likes of Politico. Bloomberg's European correspondent, Oliver Crook, is, of course, live on the ground covering this for us. He's at The Hague watching all of these arrivals, monitoring the conversation. Ollie, let me come right to you here. How much momentum does this conversation have that maybe we don't need to hit 5% to get to where we want to go?
I mean, I think that it is very difficult to imagine a world in which, NATO allies in the United States are going to accept, a sort of full stepping out and backing down from that commitment of 5%. There's been attempts to sort of fudge the numbers a little bit in terms of trying to find sort of workarounds. And again, let's just remind people how NATO works and how this sort of spending is delegated. It comes down from the top, and they don't talk about the amount of money that a nation needs to spend, but amount of the capabilities that they need to provide. And that is what Spain is trying to say. Spain is trying to say, listen, we can achieve our obligations under NATO, the capabilities, while not reaching the 5%, or we should say the 3.5% on hard military spending, but we can do it at 2.1%. There is, of course, a lot of skepticism about that, and as you mentioned there, we heard from Marco Rubio in Politico a little bit earlier today saying that he doesn't think that agreement with Spain has reached, that Spain has reached is sustainable, and frankly, it puts the rest of NATO in a very tough spot, Spain in a tough spot with their other allies of NATO. So this is certainly going to be a continued active conversation. Obviously, Donald Trump, we believe, is now in the building. We just saw what looked like the beasts who arrived here at the NATO summit, and we'll watch very closely if there's any transaction between Donald Trump and Pedro Sanchez, who seems to be the sort of final holdout. But overall, we have to say that this is a NATO summit that has been choreographed in large part to flatter Donald Trump, both in frill and in substance. The frills, he's had dinner with the king and a number of other world leaders. He was the only leader that was invited to stay at the president, or I should say, as the royal palace, where the king also sleeps. This is a very rare honor that they bestow. And of course, the substance is that 5% NATO spending goal. And that is something that, frankly, seemed completely inconceivable even 6 months ago, and now is becoming the new reality for NATO.
Is it going to be? What do we think is going to come out of this summit? Ollie, what is the end game that people are talking about? All I've heard is that we're going to see a very slim communique that comes out that everybody can broadly get in line. If that's the only achievement, is it enough?
Well, really, it's about preserving the status quo and what the entire world took for granted for NATO and the Article 5 coverage that that applied basically for the last 50 years. If NATO can walk away with that, basically not changing of that, that would be, I think, a large success. We already had the President of the United States, Donald Trump, on the flight over here on Air Force One, starting to talk about Article 5. There are different interpretations of Article 5. Does the United States necessarily step up? He says that he'll give his definition of Article 5. That'll be something that everyone will be closely watching. That is on the sort of downside. But again, Guy, really what is trying to be achieved here is the preservation, at least on NATO. I mean, forget the G7, but at least on, NATO, the sort of previous world order. If they can do that, if they can satisfy Donald Trump, that will be success at this meeting. And I believe that if they get to that 5% level, they potentially will satisfy the United States and President Trump. That being said, when is Trump ever satisfied? He may have some other demands. We'll have to see what he says at about 3 p.m. this afternoon.
In terms of, how much do we know about the choreography? We now understand that he's going to be seeing Zelensky tomorrow. Ukraine looks like it's being pushed to the right in terms of the timing. In terms of the choreography for the rest of the day, what am I watching?
Yeah, so you're watching for any comments that we're expecting from Donald Trump potentially in the next few minutes. We've got a very close eye onto that. There will be a number of bilateral meetings, and one that was sort of watching very closely is this meeting between Trump and Zelensky. It was not clear that they were going to meet at the summit. It wasn't clear that Zelensky was even going to attend the summit because, Guy, to what exactly you're alluding to, it's been pushed right down the agenda. There's also the potential friction point, Guy. We will watch this very closely if there's any interaction between Emmanuel Macron and Donald Trump. Remember, Emmanuel Macron a couple of days ago called the air raid against Iran, dropping of those bunker busters over Iran. He said that it was illegal under international law, so this could be another point of friction. But as you say, Guy, this has all been choreographed by Mark Rutte to basically have a seamless in and out for Donald Trump, a short set of meetings, so that nothing can go really terribly wrong. And really, they're going to try to sort of bury the conversation around Iran and keep this just focused on the NATO alliance and how strong it is going forward.
Ollie Crook, thank you very much indeed. Oliver Crook joining us from the NATO summit. Let's bring in Valerie Teitel just for a quick comment. The markets, we're all watching what is happening. What are the markets going to be watching today?
Look, I mean, there was already a reaction in the German bond market yesterday to the fact that there was a Reuters story about having them bump up Q4 issuance. So I do think the market is going to react to any headlines around more defense spending. Frankly, it's something that has been weighing on the bond market. You know, fiscal worries aren't just something that's taking place in the Treasury market, but here in Germany, here across Europe as well.
It's a fascinating one. When we talk about that read-through, though, in terms of what you're seeing perhaps in the German bond market relative to maybe where leads are getting from the States, what's leading here, Europe or the U.S.?
Well, in terms of the big fiscal surprise, it did come from Germany earlier this year, but now it's all the focus on how quickly they can roll out this spending and whether it will impact GDP sooner rather than later. But that's still a big question for the market. I don't think we're going to get answers like that from today's NATO summit, but that's definitely something weighing on the bond market's mind.
Absolutely. Bloomberg's Valerie Teitel walking us through maybe what the bond market is thinking as we kind of sit on our hands a little bit, monitor what's happening out of NATO. Of course, you are looking at a live shot at the moment of comments coming from the Greek Prime Minister. We have been seeing a series of them. We know that Donald Trump is in the building, so we're going to keep a very, very close eye on what he has to say and how this idea of a spending target is received. That does it for the opening trade. The Pulse is up next. Ken Moelis, the founder, chairman, and outgoing CEO of investment bank Moelis & Company, is going to be joining Francine Lacqua on the Pulse. Full coverage in the hours ahead from The Hague as well. Stick with us. This is Bloomberg.